and welcome to today's edition of Capital Market Live on Channels Television. I am Will Evang. We take a look at how investors performed this week. But first, as always, let's check in on markets outside Nigeria. Now, stocks listed in Europe dropped Friday after U.S. President Donald Trump threatened China with a fresh wave of tariff increases. So the pan-European stock 600 finished Friday's trading session down 1.3%, with most sectors and major bosses in the red. We see the UK's FTSE 100 was down 0.86%. DAX in Germany was also lower 1.5%, and the CAC 40 in France 1.53%. Meanwhile, we see French President Emmanuel Macron's self-imposed 48-hour deadline to select a new prime minister, dampening market sentiments there. Now look at Asia markets, where it was mixed on Friday as investors weighed economic signals. On Japan's Nikkei 225 fell 1.01%. See that on the screen. Shanghai in mainland China was down 0.94%. That's nearly 1% down. And we see the Hang Seng in China also down 1.73%. Now, in contrast, we see South Korea's Kospi gained 1.73% after a holiday. And we know that shares of South Korean chip makers SK Hynix and Samsung Electronics hit record highs on Friday after a near week-long holiday, boosted by a series of artificial intelligence deals. Now, SK Hynix shares paired gains to rise 8.22%. So Samsung Electronics rising over 6% to hit that fresh record high, according to data from FactSet. And the two companies are set to benefit from an OpenAI and advanced micro devices deal, that's AMD, and that could see Sam Altman's company take a 10% stake in that company. Now, shares of AMD rallied on the news, and they're up more than 40% so far this week. Now look at the U.S. now. Stocks tumbled sharply on Friday after President Donald Trump threatened higher tariffs on China, accusing Beijing of being very hostile with its rare earth metal restrictions, a key resource for tech and defense industries. Now the Dow Jones, we saw that falling 1.9%, NASDAQ down nearly 4% there, and the S&P 500 2.71%, while the NASDAQ dropping 3.5%. It's the steepest decline since April the 10th. Now, earlier in the session, that was on Friday, markets had traded higher, with the NASDAQ even touching a new record high at intraday before the sell-off intensified. Now, let's come back home to Nigeria. We'll start off with the NASD unlisted equities market, which saw a rebound, from this week compared to last week when it closed in the red with a 0.08% uptick. The market cap also moved up slightly. We see it close up at 2.07 trillion naira, and we see the trading activity was largely positive. Volume traded fell by over 0.5%, more than 15 million to 7 million units, while value rose 125% to 396 million naira, and all in 99 deals. On the price performance, we see Double One PLC leading that chart, Mixed Real Estate featuring on that list for a second week in a row, and we also see UBN Property also on that gainers chart. Industrial and General Insurance, that's IGI, led the losers this week. The stock price dropped nearly 19% to close at 47 kobo. Now on the activity chart, let's see how that performed. Most traded securities for the week, we saw Okitipu, All Palm, Friesland Campino, Wamco, and Double One PLC featuring on that. And let's look at the NGX market now. Let's always call them the big guy. A close positive for the week. Very strong notes as the all-share index jumped over 2.3% to 146,988.04 points, hitting a new all-time high and pushed the market cap to about 93 trillion naira. Market activity was slow, however. We saw that when compared to last week, a total of 2.2 billion units of shares were traded worth 90 billion naira. However, the number of deals were higher this week at 138,177. That's a thereabouts. Now, look at the performance of key sectors we track here. The banking index was the lone loser for the week. All other indexes, the consumer goods, industrial goods, insurance, oil and gas, they closed up in the green. And we saw the oil and gas as insurance, 3.69%, industrial goods, 4.23%, massive jump for those indexes. And let's look at, the other sides. We see the gainers for the week. a 16% gain, followed by Omatech Ventures and AXA Mansard also featuring on that Guinness list. Sovereign Trust Insurance was that leading stock there. And we say for the losers, we have Living Trust Mortgage Bank there, down 14.61%. And we say Nimet also on that list, and UH Real Estate also featuring there. While we saw Cornerstone, Ella Lakes, and Chams, Fidelity Bank, they were most traded stocks for the week. There on the screen, investors were probably picking or selling off those shares. Now let's look at more stories coming in. The Securities and Exchange Commission, SEC, has cautioned the public against investing in AfriQuantumx, an online platform claiming to trade in cryptocurrency and stocks, stating clearly that it is not registered to operate in Nigeria's capital markets. And the SEC investigation suggests AfriQuantumx is being promoted heavily on social media, and it exhibits characteristics typical of fraudulent Ponzi schemes. And the Commission reminded Nigerians that engaging with unregistered entities carries significant risk, including total loss of funds. To protect themselves, the investing public is urged by the SEC to verify the registration status of any company or individual offering investment opportunities via SEC's official portal. Now to discuss this and many more on the program, we have Onose Asotie-Enaholo, is a senior investment analyst, Main Street Capital. It's good to have you join us in the studio, Onose. I think I would say welcome. This is your first time coming in.
It is.
How does it feel?
It's a different feeling from just being in front of a
computer. Of course.
Yeah.
Definitely, we've seen the market performance for this week. It's a fresh high for Nigeria's market. Yep. The last all-time high we had was at 146,600 thereabouts. Now we're at 146,900. How does this make the market? What position does it give the market? Are we nearing 150 anytime soon?
I think we could very much get really close to 150. Looking at the dynamics, in the market right now, it's a lot of what we're seeing, or what I believe we're seeing, is a repricing of a lot of companies. Some people say that for a long time the Nigerian equities market was undervalued, and that is correct to some extent, because when you look at the companies themselves, their results, even for a lot of companies that are in the real sector, consumer goods, industrial goods, you see stronger revenues, stronger earnings, and of course now investors are beginning to just really look at these companies with, should I say, fresh eyes this year after everything that has happened, and they're beginning to go, oh, okay, these companies are, a lot more valuable than I had initially thought. Mm-hmm. And then we're now seeing that, play out in the markets.
Okay, so what would you say are the contributing or the main drivers driving, pushing investor sentiment towards, say, consumer goods and industrial goods? We saw them close off for the week really high. Insurance also in the eye of investors, but banking was kind of like a laggard there. What do you think is playing out for markets now?
So right now, people are looking at the dynamics within each sector. So what we saw earlier in the year was a sort of general rise, even though we also saw rotations, slight rotations on the back burner. But we saw a general rise. I don't think we're seeing that now. So for example, if you look at consumer goods stocks, right? People are looking at companies that have strong revenues and low PE ratios compared to either their peers or the industries. And then we even see that happening even in industrial goods. For example, I'll give WAPCO, Lafarge. The last time Lafarge got his all-time high, I think around the 114, it was a couple of years ago. So when the price got there, I know that personally I looked at its earnings, and there were several multiples, their profit after tax was several multiples compared to what it was then. So we're thinking, okay, prices are at the same level, but this is a much stronger and much more profitable company. So people are beginning to see that and reevaluate.
So what should we expect for, because you're talking about stock rotation, market rotation. Right now investors are, probably rebalancing their portfolios, moving it around. With interest rates, coming down now, we see it at 27% and inflation still ticking downward. Is this performance that we're seeing for the NGX still going to persist? Because some analysts are, projecting or predicting an 11% in the last quarter for Nigeria stock markets, and that's excluding what we already gained so far. So are we going to see that rapid rise for stocks, seeing everything, the macroeconomics in the country?
Yeah, it's very much possible, because even when you look at PMI results that came out recently, you saw a jump in composite PMI to I think 54 from 51, and then in the industry where it was previously in contractory level, 49.1 in August, it's now like I think 51 point something. So even when you now look at business expectation surveys, right, you have situations where there is an expectation that, you know, even now with inflation coming down, the expectation that look, the cost of inflation and then its effect on even NPR, you know, the cost of doing business, cost of money is going down, inflation is declining, and then even other metrics like foreign exchange, right, with Naira stabilizing, foreign exchange losses or foreign exchange, what's the word? The foreign exchange companies that buy or deal with suppliers abroad, the burden, yes, the FX burden, that companies had faced with a weaker Naira, they are not facing it as much anymore. And so these things now tend to improve profitability. And when that happens, of course, investors will react in kind with higher valuations and people coming into the market and buying up those shares. So yes.
So you're saying right now that investors should be looking at more, say, the consumer goods and not the banking sector for now? I think
investors are already looking more into the consumer goods. Maybe retail hasn't caught up yet, but I do think institutions have caught on to consumer goods, and even oil and gas that was down pretty much throughout the year, we're seeing a pickup, and it's all fundamental, you know. So yes.
So we're talking about fundamentals. We have those results coming in. We'll probably see them trickle in more, and we'll talk more about that in the course of the week. But let's just talk about something important which happened this week. We said FTSE Russell putting Nigeria back up, you know, on the list of, you know, let's say probation list. Let me just put it that way. You know, we're back on the list of, you know, for reclassification from unclassified in the frontier market to possibly to frontier status. Let's get back to that. And this is after 2 years. We were downgraded in 2023, and now this news is coming up that we have met some of the qualifications, I think 5 of the qualifications to be put back on the frontier market. How did market watchers react to this or receive this news?
I think of course we received it positively, but I don't think we're going to see any major market moves in that regard right now, because, well, one is we've been put on a watch list, so we haven't been reclassified just yet, and it's going to take a while. So the soonest that we can, I guess, pass the first phase is in March, where if, you know, certain conditions are met, if, you know, FX repatriation continues to be under 30 days for, you know, foreign capital firms, you know, and there's continues to be access to, you know, the FX liquidity in the market. Sure, if by March next year, you know, these conditions are still in place, then it's like, okay, we've passed the first phase, and then we could now possibly be reclassified in September next year. So it's still going to be a while.
Okay, so before we go on break, I just want to know, you mentioned the FX situation right now, and that's one of the issues they said is still unmet. So, you know, we've seen that easing in terms of how they can repatriate funds. But how big a threat is the forex situation to closing the gap and meeting the classified or getting back into our frontier status?
It's big. It's the major reason, you know, we got declassified in the first place, right? Where funds could not repatriate their funds, companies could not repatriate their funds, right? So right now, it's actually the main focus, you know, in the criteria that we're given, because most of the other ones, we've met them, aside from the thing with the derivatives, right? But most of the other criteria, we've met them. So the FX thing is huge. In combination with, you know, us having enough liquidity for companies to repatriate funds in 30 days, we must always clear our backlog. So if we do have another situation where a backlog begins to form, then that could even now prevent us from being, you know, reclassified again.
We'll talk more on that, but we'll go on a quick break now. Capital Market continues. Do stay with us. Welcome back. You're watching Capital Market Live on Channels Television. We've been discussing the markets performance this week, and also FTSE Russell putting Nigeria back on the watch list for reclassification back to frontier markets. We'll be discussing with Onose Asotie-Enaholo as a senior investment analyst with Main Street Capital. He's still with us in the studio. So Onose, we've talked about what could happen when we are reclassified, and this is going to happen in September 2026. The review will take place in March 2026, and we will have that when we meet up in September. So what role do you see the CBN, because they did praise the CBN and the regulators, the intervention or the work they've been doing so far to get us back there. Well, what role do you see the CBN, the SEC and the NGX play in the next 12 to months to come to ensure that we are on track for full reclassification and that there is no stopgap or there is nothing that would block that reclassification from happening?
Okay, so let's start with the elephant in the room, which is the FX. So the CBN has done quite a good job, with their B matching system, and all. So they need to keep that going, right? So on one end, the system is really good when it comes to, matching buyers and sellers, right? But it's not a source of FX liquidity in of itself, right? So it helps manage FX liquidity that is available, right? So in the market, the CBN still every now and then has to come in to, sell FX to stabilize the market. Yes, it's at a level that is a lot less than it was in, say, January, February this year, but it still happens, So maybe in a week, for the last couple of weeks, on average, maybe 80 million. Compared to maybe 130 to 100 million per week, a couple of months back, but then there still needs to be supply, now, before, earlier this year, as well, and even late last year, a lot of the supply came from foreign portfolio investors coming into the fixed income markets. Now, I'm not really sure how the dynamics will play out with dwindling rates. Now, I know that we have still seen quite a bit of demand for bonds. I know at the last bond auction for the 2032, I believe, it was over like $1 trillion in subscriptions. So those are still healthy numbers. Those are still numbers you do want to see. But the CBN will not have to, should I say, toe the line between keeping foreign portfolio investors coming into the market, so that there will be consistent supply of inflows of FX into the market on the CBN's end. So for the SEC, I think where the SEC could come in would be in the when it comes to derivatives and market depth, right? Our market is growing, and I love the pace at which our market is growing. 92 trillion in market capitalization is fantastic, but we are lacking in derivatives. If you want to short the market, you can't. I think only a few firms offer that option, and it's pretty restrictive. It's pretty limited. And so the SEC is going to have to come in to help in that regard. And for the NGX, I guess it's just more of helping with market depth, and ensuring that trades are smooth. Now, of course, I feel our market is still young compared to more developed countries, even in Africa here, like I think Johannesburg's stock exchange. There are certain companies where certain companies and certain periods of time where the order books are so thin that there have been situations where I place an order and I see the market move, on behalf of my firm, and I'm like, okay, order books are quite thin. So we need to have more robust order books, from the NGX, and that would just really help, even foreign players coming, not just as investors, but even possibly as market makers, to help, boost liquidity.
Definitely, in terms of liquidity, could you just walk us back a little bit here? Let's say, take us back in 2023 when we didn't have this, weren't downgraded. How much inflows were we getting from foreign portfolio investors into the equities market? Because right now, there are a lot of passive, inflows that have been stopped because of this downgrade. And how much should we expect if we are put back, if our status is upgraded?
Well, I can tell you how much outflows we had when we got downgraded, which was about, I think, 460 billion, at least. So there could have been more that wasn't really tracked well, but at least 460 billion outflows, left the market because of the downgrade. So, I mean, it's the assumption that at the very least, if we do get reclassified, then we should see at least 460 billion come back in. But I think we would see a lot higher because I think our market has matured a bit, since then.
So, but we're talking about a lot more funds coming in. Is our market, in terms of the infrastructure, is it robust enough to be able to receive it without causing any form of volatility?
So, it depends on what people buy. So we have stocks that are very liquid, and the stocks in the I think the NGX 30, those stocks are pretty liquid. So with not too much inflows, the market could absorb that without significant price impact. But if you are, if investors are getting into companies that are not as liquid, then you could see that. I think we saw something earlier this year with Beta Glass, where they released a fantastic result. Their earnings were up 9x, and then the stock just ricocheted, skyrocketed up like 500%. So we could see things like this, if funds start flowing back in.
So let's look at very quickly inflation data that's coming in next week, and probably tying it to what all that is happening and playing out here, because strongly a key factor to be watching out. Investors are really keeping an eye on that. We're seeing at about 20% levels right now. What do you expect for the next inflation, and how do you see it impacting market performance for this last quarter?
Inflation could pretty much be lower next month, maybe around the 19% level, close to 20 or just slightly above 20. Now we have seen a deflation or disinflation trend, rather, in the market. We might see that, although if you look at the month on month, it's been a bit sinusoidal, where I think between April to June. We saw it between April and May. It rose, and then to June it kind of dropped. So it really depends. For food inflation, I know it really depends on agricultural activities and agricultural. So I look at farm, the farm produce inflation. So months where farm produce inflation is significantly lower, then you have lower food inflation. So just looking at agricultural produce. But if we do have lower inflation, I don't know if it will directly, you would see like a direct effect between inflation on the markets, where, okay, if inflation is slightly higher, then people start selling, and inflation is slightly lower, then people start buying. You won't really see that. It's more of how that now, impacts the operations. One thing I look at is input and output prices. I know for agriculture, the disparity between input and output prices has been growing, or it's the most prominent between, of course, industry, services, and agriculture. Now, I see the rise in input prices as, say, PPI, right? And a working theory is PPI will eventually trickle down to CPI, unless you have situations where companies are able to come up with maybe some fantastic internal economies of scale or something else. But aside that, barring that will eventually trickle to the consumers. So even though I think we are seeing a disinflationary trend right now, I don't know how sustainable this is, and I think in the months to come, inflation might start to pick back up.
So do you think the CBN governor should be looking, at more keeping the stance very tight, or loosen it some more?
There's only so much the CBN governor can do when it comes to inflation in Nigeria, because a lot of our inflation is cost-plus inflation. So it's structural issues. So if you have flooding in a particular state, I think I saw on the news on channels that there's an expectation of flooding in Benue State. So if something like that happens, then that affects food supply from food producing states to the markets. There's nothing the CBN governor can really do about that. So if that now trickles down to inflation supply, it's like, okay, there's higher inflation, but at that point, CBN, he might not need to really do anything with monetary policy rate at that time, and maybe just watch what happens, with the value chain, the food value chain. And hopefully that triggers down to the companies, especially lower FX, and when I say lower FX in terms of exchange rates, between the dollar and the naira, and also in terms of inflation, if it
down more, we see companies have lower cost of goods. So at least for operations and to bring down, get more profits for investors. Thank you so much, Onose, Asotie-Enaholo, Senior Investment Analyst with Main Street Capital. Thank you for sharing your perspective on capital market. We truly appreciate it.
Thanks for having me.
And that wraps up this edition of Capital Markets. Remember always, whether the markets are bullish or bearish, knowledge is always your best investment. Keep watching, keep learning, and keep growing your financial survey. You can catch this again on our YouTube channel. I'm Will Ibong. Bye for now.